Hello everyone, welcome back to T.U.B Investing YouTube channel. And today what I'm going to talk about is the fear of missing out. It's damn real right now. I'm sorry, I'm supposed to talk about a company that I've sold and I'm no longer buying in, but actually I wanted to talk about this instead for this video first, right? The fear of missing out and versus what's my plan, right? So let's get down to business right now. Before I continue, please note that I'm not a financial advisor, and I will still appreciate if you like this video. Please subscribe to me and ring the bell, right? And you will see all my videos that will be coming in fast and furious for the next 1 week or so. Let's get back to fear of missing out. So as you know, I've actually created this other video called I sold all my US stocks, right? Probably I think 2 or 3 video ago, so last week, right? I actually put out this video. So in this video, my main reason of selling the US stock was most of them was in Tiger Brokers. I have some I was a bit skeptical. No, rather than skeptical is the wrong word. I just wanted to shift that. I have some views that I had on them which I don't like, so I want to shift them to Interactive Brokers. And obviously I thought, yeah, how long can it take, right? Oh my god, man, it took 10 over 7-8 days. So on the 3rd of January, I fully sold all my positions. I didn't know that I need about 2+ days to settle all these trades in Tiger Brokers, and I need an extra 1 day to review my withdrawal of all these funds. And then obviously weekend came, right? And no one is working, right? So in Chinese it's really direct translation from Chinese is his mother one, right? Right. Then the weekends come, I can't do anything, and then I transfer the money into the bank, and then transferring here and there and getting everything straight, right? And then once then there's another day that I need to to get the money transferred in IBKR, before getting approved. And when all the money is in IBKR, Interactive Broker itself, it's 10th of January this year, and as you can see here, 4th of January is about 3,852. By 10th of January, it has went up to about, I don't know, closed. Anyway, the market is moving up regardless, right? And I don't want to go into the stocks that I had, right? Most of you know that I had Digital Turbine, and I have a lot, and I sold all of them, right, at about $15+, right? And you go and check the price right now, it's at 16+, right? If I kept it all in Tiger at this point now, I would have probably gotten a lot more money out. And the opportunity cost, to be honest, right now is about, if I have to say, is at least about $9,000 to $10,000. So I mean having said that, I saw, right, then I was thinking, right, at 10th of January, okay, never mind, right? The market is going up, let it be, right? Maybe let's time the market a bit, right? Rebalance and then plan for, CPI is coming, right? CPI is coming, and then yes, if CPI, I was thinking in my heart, right, if CPI ever come, right, the market will tank. Yes, then I'll go back into the market aggressively, right? But as you know, the market didn't tank. I mean, it went down slightly, but it didn't really tank for the last 2 or 3 days. And I got into a bit of a FOMO, right? When you are 90% in cash right now, and you've probably, like I said, I've probably lost about $9,000 to $10,000 of opportunity cost itself, and that doesn't translate. Basically, I started to FOMO, right? And FOMO meaning fear of missing out, right? And it's getting very real. To be honest, it's getting very real. So, but on the other hand, between 10 to now, if you have been following me, I talk about free cash flow x stock stock-based compensation. And then I actually had, with all this cash on hand, I actually tried to I thought about rebalancing. Rather than timing, I tried to plan a DCA weekly so that I can be more aggressive in buying this company. And along that line, I've also had this intrinsic calculator that I've created. I call it Sarah intrinsic calculator right now because I want to delegate this to my daughter. So that was why. And I spent a lot of time on it. So a lot of try and error. In fact, I created a few of this calculator, and at last I had this final piece in my puzzle, right? And then after that, I actually came up with this plan to allocate between Type 1 and Type 2 companies. If you don't understand what's Type 1 and Type 2 companies, you can go back to my last few videos to take a look, right? So Type 1 companies basically companies that probably have free cash flow. Type 2 companies is the company that don't have free cash flow but interested. So as you can see here is actually my plan of how I intend to distribute the cash, plan to invest along, right? So if it all start with looking at the age, the composition of the company. If I'm no longer interested, if there's nothing of this to talk about, I'm not interested, I don't invest. If it is yes, then I'll go down to the Sarah intrinsic calculator, right? Then after that, it goes to the point where if it pass the fundamental, if it pass the future valuation, right? That means if it's below the future valuation price, the current share price is below the future valuation price, meaning it's undervalued right now, and it has more than 1 point, then it's a yes, right? Or it has more than 3 points itself, although it doesn't pass the undervalued view, right? It's still a yes. Okay. So in this section, if you go to my Type 2 company, you can know that there are few. I look at market sentiment as well. I look at other than the FCS valuation, right? Free cash flow valuation. I also look at market sentiment. I also look at balance sheet strength and many other things, right? So you can go back to the video and take a look at it. If they don't have free cash flow, it doesn't pass this criteria, right? So it's a no and become Type 2, right? So Type 1 company basically those that have free cash flow. Type 2 company no. So once it pass, right, Taiwan as a Taiwan company, do I have any concerns, right? If I don't have any concern, it becomes a core position. If I have some concern, am I not interested in it, then I don't invest. If I am still interested, then I'll invest, and it will be deemed here as the 10%. So core position seems to be highlight of the portfolio. You'll be about 60% with probably a maximum of 4 positions. And the 10% Taiwan companies is what I call sub Type 1, right? It's 10% maximum of 2 positions. So as you can see here, I concentrate about 70% into 6 positions, more concentrated pot. And then for Type 2, right? So do I have, if I still think the company is still undervalued or significantly growth moving forward, if it's a yes, then probably I'll look at 20% of the company, and it's a maximum 6 position. If I'm no, but I'm still interested, to be honest, this is like, no matter what, I love this company, right? I just want to invest a bit in it, right? So it's about 10% with a maximum of 6 position. So you can see Type 2, similarly to what I said previously, the plan is Type 1 company, I will be more concentrated. Type 2 companies, I'll be more diversified. So as I say here, this is the plan, 70-30 rule. 70% of the company, Type 1 company, X free cash flow excluding stock-based compensation company, I'll concentrate more, and Type 2 companies, I'll just diversify more, right? And then as I can show here, right, there's a man looking at the computer, so that's my plan, right, versus the heartache that I felt and the FOMO that I'm feeling, right? There's really this the brain is saying, is talking. There's always this show, right? There's always this kind of scene in the movie where the devil and the angel is talking to you at a similar time, and they are just discussing and giving you options. And this is how I feel, right? I have a plan, but I'm also feeling the fear of missing out right now, and it's real. I don't deny that. So but there's this interesting observation. I've always talked about this Fed reverse repo, and I don't really see a lot of people talk about it. So in December 29 is there's about 2.3 trillion of cash at the sideline, right? When I did another video called recession, so I talk about that. And let me see, how do I ship it to so if you look here, right, this is my 30th December is about 2.5 trillion. So 29th of December there's a 2.3 trillion. 30th of December there's about 2.5 trillion. And then let's go back to this, right? And then right now it's about 2.1. 13th of January is about 2.17 trillion of cash on the side. So roughly it's still about 2 trillion. It's still more than 2 trillion, but it's about 2.3 to 2.5 to 2.1 now. So, and then if you understand, if you're looking at the market, right, between 2.3 to 2.5 trillion, right, the market tanked slightly. And between 2.5 to 2.17 right now, the market rises. So what I'm saying here is there's a lot of money at the sideline, and nobody really talk about this, but there's a lot of money at the sideline, and if this money are invested in the stock market, share price will rise. That is confirmed chop plus guarantee, right? So yes, a recession might still come, but if people want to take opportunity of a low share price, they will start using this cash on the sideline and dump it into the market, right? And between 2.5 and 2.17, right, it's about 300 million. So I would say that over the last 13 days, 200 million was 2.5, 2.2, about 300 million was dumped into the market, and that caused the slight increase in the share price, its S&P 500 and stuff like that, right? So I just want to get this straight to you. This is also I would say this is also a mitigation for me, right? To say I should not be so fearful right now. There's still so much cash on the sideline. Follow your plan, okay? So what I'm doing now is I thought, rather than focus on the market, fear of missing out. Right now I just spend time. Spend time with my children, watch some TV, enjoy life, do sort of things, right? And follow my plan, right? DCA weekly and stuff like that. Yep. So that is my plan right now. Then that will be the conclusion, and I just want to conclude, right? Timing the market sucks, and fear of missing out sucks. Big time. Okay. Yep. So the next video I will follow up with I'll follow on with this company that I said that I'll be sharing, right? That I sold that I didn't sell due to the changes in the due to me wanting to switch broker, but because of the company itself, right? So yep, that's all. Thanks for watching. See you in the next video. Bye.